Hello, everyone, and welcome to today's virtual discussion digging deeper into the CARES Act and SBA disaster loans. My name is Allie Mitchell, and I will be your moderator. You will find a chat icon on the left side of your screen. That is where you will be able to submit questions. We will be answering many frequently asked questions during today's conversation and will address as many additional questions as we can. For any unanswered questions, we will reach out to you individually. And with that, I will pass it off to Jacqueline to start us off.
Thanks, Ali. And I just want to say thank you to the entire Armanino team. To all of you that have tuned in today's webinar, I just want to share with you that Armanino was integral for LCF to complete our own application, both the PPP and the EIDL. They were the first ones to put the most practical webinar together to their clients, and we were able to move forward quickly with their support. When we got this help, I thought to myself, our nonprofits need this as well. So for all of you that are tuned in this morning, I know several of you have reached out this week asking questions, and I said, hold on, they'll answer them over this call. I promise that they'll deliver. I want to thank you all for your patience as we tried to figure ourselves how to navigate through this fast pace and fast changing world that we're living in right now. I know many of you are probably aware of the news sources that come in that funds are running out for the PPP, or they have run out. You'll hear this from me, and you'll hear this from several partners from the Armanino team, that we should continue moving forward with those applications. We are hopeful, expecting that the federal government would actually add money for these federal loan programs, and we want you to continue and be ready, and as we say, be online, stand in line, so that if and when the funds become available, you are ready to move forward. So again, to our nonprofits, we thank you for your incredible service to our communities. We know that you've been hustling and providing all types of direct services, advocacy, and support to families that have been directly impacted, while you yourselves are trying to figure out how you're going to make do given the economic fallout and the just unknown questions that we all have about the future here in California. So with that, I'm going to turn it over to our colleagues at Armanino, and just again, if there are questions, as Ali said, that won't be answered today, they will be around afterwards to answer them. So thank you.
Great. This is David Miller, and Jacqueline, thanks really much, very much for that introduction. And let's move on to the next slide. And I've got my colleagues Jen and Matt, who are also going to chime in as we go through. But I'm going to kick this off, and we're going to cover a few things today. Really kind of talk about the Paycheck Protection Program. Our goal is to really be able to address a lot of frequently asked questions that we're getting, and go into some of the details around the calculations. And also really, I think, spend a little bit of time today on the forgiveness aspect of it, because that is the most attractive feature. And that is, for those of you who may be on the call who may have already gotten some funding and are in that process of now having to kind of manage the forgiveness, we'll be talking about that. The other piece is there's kind of a couple other ones we're going to talk about: the economic injury disaster loans. We'll talk about those, as well as the Main Street lending program that's also available as well. We'll talk a little bit about that, and we'll talk about some of the other stimulus packages that are out there, including the payroll deferral, the payroll tax credit, and some other features that are available to nonprofits out there. So let's go to the next slide. So I'm going to spend a bit of time on this slide going over it. Some of this you may have already kind of gleaned from the press, but I think it's worth repeating a number of these things. So the first one on the left-hand column is the Paycheck Protection Program. Now that has been rolled out through the CARES Act. It has a maximum loan amount of $10 million. One of the attractive features of it is its interest rate. It is at 1%. I know early on there was a different rate that was out there. It is at 1%. And does have a 2-year maturity alongside of it. The basis of the loan amount is it's based on your monthly payroll costs. And it's interesting, a lot of the banks, since this was rolled out, have really kind of, I would say, fine-tuned the calculation process and made it a little bit more turnkey. So you should be checking with your bank on these types of loans. The PPP is available through your banks or through authorized SBA lending banks, and other banks have also gotten into this process as well. The time to funding, now we're hearing a lot of different things right now. now that this has gotten kicked up into gear, we have had folks who have gone through this process in about a 1 to 2 week time frame have actually gotten their money. Obviously, we just, Jacqueline mentioned the press earlier earlier in this broadcast. There is some concern out there, but we are recommending for you guys to continue to proceed with those applications. That time frame may be a little bit longer depending when the funding does come through. The eligibility is for less than 500 employees or meets the SBA size criteria. And also, I think that the big addition, particularly for folks on this call, is the inclusion of nonprofits, 501c3 organizations into this program. The real attractive feature, of the PPP is the forgiveness feature, and we'll go into more detail about that in a few more slides. And unlike other SBA loans, there is no personal guarantee and there is no collateral required for the PPP. The application is fairly simple. It's 2 pages. And as I mentioned, some of the banks have now incorporated the payroll calculation process actually into the application process to kind of help you guys through that. The compliance requirement on the back end, though, the forgiveness piece, which isn't really nearly 100% known at this point. We're expecting it to be somewhat complex. It's going to involve inclusion of 941s. It's going to involve inclusion of payroll reports, and to be able to validate expenditures for rent and other things that are covered under the loan. So as I mentioned, it is appropriate for certain expenditures, including the cost of retaining employees, paying rent and utilities, and an interest on mortgage debt. It's not to be used for paying off other debt or paying off any other types of expenses. It's really there. The money is really there. The spirit of the money is really to keep people employed and to keep people on the payroll and help kind of keep the businesses and or nonprofits moving forward. Okay. So the second one is the economic injury disaster loan, and I think that this lending vehicle has been around for a long time. If you can kind of think about a tornado or a hurricane or an earthquake, these are the types of loans that have been in place. They're generally were available and very localized. And to kind of give you a sense of it all, the SBA, through all its lending, both to small businesses and even through like the economic injury disaster loans, in a single year was lending out $50 billion. Clearly, they're being asked to lend out a lot more money in a very short period of time, which is adding to some of these delays. Anyhow, kind of getting back to the economic injury disaster loan, that is only available up to $2 million. And some of you may already have an economic injury disaster loan. And if you do, you'll be asked to, if you apply for a PPP, you'll be asked to refinance that economic injury disaster loan through the PPP. However, just staying with the economic injury disaster loan for a minute. So it has a interest rate up to 3.75%, but for nonprofits, it's actually capped at 2.75%. And it has a much longer term, which is up to 30 years. So if you need money, this is a good opportunity to apply because you can pay it off over a much longer period of time on a much more probably digestible monthly fee. Under this particular program, you do have to kind of demonstrate and acknowledge some level of economic injury for particularly around nonprofits. That may be, a reduction in donations, a drop off in grants, whatever that is. You're going to have to be able to attest to some level of injury. These are actually done directly through the SBA. It is currently an online process. I'll talk a little bit more about that later. We believe the funding for this is going to be about 4 to 6 weeks. And kind of talking in combination of the online application process and this timeline, the application is fairly straightforward online, and it has a grant feature included in as well. I'll talk a little bit more about that later. But once you go through that online application process, you're going to have to wait to hear from an SBA loan officer. And we really feel that could take 4 to 6 weeks at this point, because really the SBA and the banks are very much focused on the PPP right now and getting all those, the applications fulfilled. The other piece of this is just an eligibility. It is less than 500 employees. Nonprofits are eligible for this. There is no forgiveness feature for this, so this is a loan you will have to pay back. There's no personal guarantee if the loan is under $200,000. So if you just need a little bit of funds, you don't have to commit to any personal guarantee. If it's over $200,000, there will be some guarantee, and there definitely will be some collateral involved in this type of loan as well. The application, as I mentioned, while it's complex, historically there's a paper component to this. It's really unclear if they're going to use some of those forms at this point. So what I would recommend is going through the online application and then be ready with some additional support around your credit report, around your financial statements, around recent tax filings to be able, so when the loan officer does call you, you have some information that you can deliver on a timely basis. We do expect there to be more guidance on this over the next several weeks. Just hasn't been a lot. Most of it's been focused on the PPP so far. And you can use the economic injury disaster loan for payroll, other operating expenses, and other things. It's a bit broader and has more flexibility in terms of how you use the funds. So this last one is something that's just kind of getting rolled out now, and it's called the Main Street loan, the Main Street lending facility. So this has a minimum of $1 million in lending, goes up to $25 million. It has a rate somewhere around 2.5% to 4% above the standard rates, which is currently at one basis point. So it has a 4-year maturity. It's based on EBITDA. So what's interesting is I was looking through in preparation for this, looking through and making sure, and Matt might be able to talk a little bit more about this, but there doesn't seem to be any right now, any exclusion around nonprofits, although it does mention EBITDA. So hopefully we'll get some more guidance on the eligibility for nonprofits to take advantage of this. You can see some of the other specifics here. It is designed for bigger organizations, under 10,000 employees, and up to $2.5 billion of revenue. Again, there's no floor on the number of employees or on the revenue. And then there is no forgiveness, but the payments can be deferred. No collateral, no personal guarantee. Not really sure about what the application process is at this point. We do expect it to go through the banks. We expect there are a number of restrictions on it. And you're going to have to be able, one of the restrictions is just being able to maintain your employees at full pay and benefits for a period of time. So those are kind of the 3 features that are out there. I'm going to turn it over. Why don't we go to the next slide? And I'm going to turn it over to Matt or Jen. And I think Matt, I'm turning this over to you, and we're going to talk a little bit more about the PPP.
Great, thanks, David. And maybe just sort of, I know you asked about the Main Street lending program as it relates to nonprofits, and at this point, we see no reason why it wouldn't. There's nothing that specifically says it applies, but nothing that says it doesn't. But I think kind of as we've gone through the PPP, and maybe the Main Street lending will do the same, is guidance continues to come out. I think once the shift moves from PPP to the Main Street lending, we may see more. So I'd say more to come. But as we go back to the PPP, and obviously I think we all know and discussed where it stands, but just making sure that we're ready, and once or if it does open back up again, all the calculations and applications are ready to go. So this is the easy math. This is what is the maximum amount of loan that I can get under the PPP, and it's based on your payroll costs for 12 months. And essentially, the easy thing to do is look at your calendar year 2019. You should have the documentation to support that. And basically, it's gross wages. You do not reduce FICA, the employee FICA or federal income tax. So it should be an easy number for you to pull. The wages are capped at $100,000 per employee. And essentially, so that's your wages. You can add on the employer benefit costs, which would be the cost of the premiums for health insurance, any state and state unemployment, and also any amount that was paid for the retirement benefits. So essentially you take that divided by 12, that gives you your average monthly cost, and then you multiply that by 2.5. So that will give you the maximum amount of loan. I think kind of as you think about that is, and we'll talk more through this, is that the amount you need? Is that the amount that you want? And some of this kind of ties back into forgiveness and the calculation that we'll go through later. But the maximum amount is 10 million. But again, it's all based on payroll costs. So we can move to the next slide. I think this might be Jen.
Okay, hi guys. I want to underscore that as you look at this formula, it's pretty easy to do if you're just looking at 2019 payroll records now. And I'm warning you, but I don't want you to worry about it, that the formula changes on February 15th of this year. It's much easier if you just use 2019 records for the banks. All you're going to do is add up your salary costs. That is already shown on your W-2s and your 941s. That will include cash, tips, vacation pay, everything is on those payroll reports already. So you don't need to add more in. It's on the payroll reports. What you do need to add is the employer paid portion of health, whatever you paid for your employees, and any retirement matching that you might have done. And you add on your state tax that you pay for your staff. So then you have that basis for your loan, and that's the amount you get to borrow. The things that you can't include are, as Matt said, anybody who made more than $100,000, you have to cap their wages at 100. You should not include 1099 contractors because those are not your employees. Those are their own self-employed people. And you don't want to include any compensation for someone who's not a US citizen, not on your payroll. So say you pay someone in Canada or Mexico, if they're not actually on your W-2s and on your payroll, you can't include them. So you would be able to include someone if you had them on an H-1B visa, for example, as long as you're going to keep them on your payroll. It makes it pretty hard to get rid of someone who's on a visa, of course. And I think it's that straightforward. Try to keep it simple so that you can give it to a bank officer who will in turn think that it's simple. And I'm seeing news as I'm speaking to you right now that they think that there's still more money to be given out and that some of the banks haven't given all their money away. And also that Secretary Mnuchin is trying to put more money into this program. So keep pushing, guys. Next slide. I think this is me too.
Yes.
When you get your money, we just talked about how it is based on one formula. That formula is all about compensation because the point here is that they want to help you keep your people employed. So the first math is to do on just the amount of your loan. And then when they give you your money, you have 8 weeks from the day the money hits your bank account to spend it on certain expenses. And they want you to spend it on payroll. So 75% of the money should be used for payroll and related costs. The rest of the money they're saying you can use on rent and utilities. If you have a mortgage that's for your business, not your home mortgage, it's got to be about your business, the mortgage interest is also included as what they're calling forgivable expense. So as David said in the beginning, the special thing about this loan is that you get it forgiven. So they give you this money and then it turns into a grant and you never have to pay it back, providing you spend it on these things. So if you say that you let one person go and you have a staff of 10, they're going to reduce the amount of your forgiveness by 10% because you're down 10% on your head count. That's what they originally said. We are going to believe them until we see the formula change. The other thing they're going to be looking at is your overall compensation expense in the 8-week period by week versus your base loan period. So interestingly, your base loan period is based on a month of payroll expense, but the forgiveness period is based on an 8-week period. So there's some math to do afterward. But I think that the best practice would be to earmark those funds, be very careful that you only use them for what they're supposed to be used for, And at the end of the 8-week period, any amount you haven't spent can be turned into a loan at 1%, which is very, very low. My most recent thinking on that is that if they leave you with some money to spend, that would be because they still expect you to spend it on payroll, probably. We were hoping that we could spend it on just about anything, but most of the language we're seeing is that if you wanted to spend it to refinance debt, they'd rather you were using a different kind of loan. So really think about focusing on using that for payroll. If you have already done a layoff, you have until June 30th to rehire that headcount. Your compensation might not get back up to the level that they wanted at, so you might have your forgiveness prorated for the amount of compensation you didn't make up, but you wouldn't get punished because your headcount wasn't as high. And then the last thing to think about is that if you reduce one person's wages below, like more than 25%, so say that you were paying someone $10 an hour and all of a sudden you lowered them to less than $7.50. Not that you would, because that's lower than minimum. Please don't do that. But if you did, that entire amount that you paid that person would not be forgiven. So as you do a combination of layoffs and maybe you do staff salary reductions, we are helping clients do a lot of that. That person you salary reduce, you just can't go below 75% of what they were being paid. So obviously there's a strategy here for who you might have to actually let go. You might actually lay them off because you don't intend to rehire them this year. You could also furlough people, which means that you temporarily send them away and say to them, look, I'm bringing you back as soon as I can. And a lot of people are doing that, especially this month while they're waiting for their PPP money. They're giving people furloughs. They're giving them a notice in writing that says, hey, we're going to call you back. And then you have a plan for the money when you get the PPP money and you bring them back at a really opportune time and a really good strategic time. So what we're doing at Armanino is pivoting for people who do get the PPP this month. We're going to start helping them figure out how to use the money for maximum loan forgiveness. So your first order of business is run and get the money. The second thing is let's model it out and figure out how to get the most out of that money. Next slide. On this one, I wanted to just make sure I ran this by anybody listening so that you know about other things. So if you're listening and you are a sole proprietor and you don't have employees, you're also eligible for the PPP. And what that math is last year's Schedule C. And if you haven't done it yet, you haven't done your taxes, you should do a little P&L, a pro forma Schedule C. And whatever your profit was last year is the loan basis for your PPP. That's your annual comp for you. And you get to take that number and divide it by 12 and multiply it by 2.5. So that also applies to LLCs who are listening, who just have one person. If you are an individual, also you should be looking right now for your impact payments. You should all be getting your $1,200 per person. If you filed a tax return, you should get this payment. And you can go to the IRS site if you haven't gotten it yet. If maybe they don't have your bank account information, for example, you go online to the IRS, there's the website right there. You make sure they have your bank information and the government is sending this out. And obviously, I wanted to make sure you know that the PPP eligibility is for 501c3 organizations. So that's why we're talking to y'all right now. The last thing is, if you've let people go, a lot of people we talk to are concerned. They want to know how those people are going to get along. And everyone gets unemployment in California, even if they're self-employed. And the federal government is adding $600 per week now to people. So people are getting anywhere from $700 to just over $1,000 a week when they're on unemployment. And that $600, that extra amount, goes all the way to the end of July. When hopefully we'll all be rehiring and the economy will get going again. So if you are on unemployment, if you are putting people on unemployment, know that that's happening. And please be sure that you're getting your economic impact payments, because this week we've seen them coming in. If you're doing your PPP application, we have seen so many payroll reports that are just dead wrong. So be awful careful about that. I don't think that I've seen one yet that has the math exactly right. If you're desperate and you just want to get it out, you could use it. I don't think the banks are smart enough to know sometimes when they're wrong. So it's okay if you have to, but beware. And then I wanted to mention, if you think that you've missed the PPP bandwagon, if you're listening and going, dang, I missed out, there are other things for you. You should right now, if you have employees on payroll, you should already be deferring your payroll tax. If you are not, give us a call and we can definitely help you figure things out. What that does is it allows you to not pay the Social Security tax for everyone's payroll that you pay. So everybody that you pay another 7.65 on top of their wages. 6.2% you're allowed to just not pay now. You have to pay it at the end of next year and the end of 2022, half and half. But that's immediate cash in your pocket right this very second. And everybody should do it. Everybody can do it. There's no reason for you not to be doing it. Your payroll processor might have trouble figuring it out. So that's why we've been spending time on it, helping people figure it out. It's worth every penny. And if you completely miss the PPP, the employer retention credit is also powerful, especially if you have less than 100 employees. If you're listening and you have less than 100 employees, it applies to you if you're subject to a government shutdown, which is almost everyone, unless they're in an essential business. So if you can't work because of government shutdown orders, and what you've done is kept paying some people, and you're paying them, but they're not actually working, this is going to apply. But if you have less than 100 employees and you're on a shutdown and it's really messing you up, you can get up to $5,000 per head per quarter credit on your payroll. So it's complex enough that I do think you would need to call us to get some advice on this. But if you're listening and saying, wow, I'm under a government order and I'm still paying my people, even if you're paying lower wages, and that might apply to me, give us a call. We can help you do the math. And again, it is up to $5,000 per person per quarter, and you apply that to your payroll and your payroll costs, you could end up having very low payroll costs. It's meant to reward you to keep people on payroll despite the fact that you're suffering. And then next quarter, hopefully everybody's back to work in July. You might still qualify for that if your receipts aren't back up yet. So say that your business is suffering and your receipts are down below 50%, you're still going to qualify for this retention credit. So it could be really powerful. If you are a big employer of more than 100 people, it's still very helpful. It only applies to the wages that people aren't working, okay? If you're less than 100, it's everybody's pay, which is why it's so powerful. If you have more than 100 people, we have to identify with you the people that you paid who were not doing a lick of work. So we need to track it. You need to have timesheets, and you need to have good HR practices to back this credit up. We can help with that too. So we can help with the accounting and the payroll. We can help with the documentation, but it's worth it because it's a lot of money and it goes straight in your pocket right now. You can stop paying that employer tax right now. So it increases your cash balance immediately. These are very powerful tools for you if you're an employer.
All right. Let me, I promised you I would come back to the economic injury disaster loans. And for those of you who don't know, this is David Miller speaking again. So let's talk a little bit more about those. So again, there's an interesting feature to the economic injury disaster loan, which are some emergency grants. So you can see here, here's the online application link. So please take advantage of that if you have not already. It's going to workflow you through the process. It does take into consideration some nonprofit specifics in there, so be mindful of that as you're going through it. It should be very straightforward information for you to provide. And at the end of the application, there's a couple things to make you aware of. One is there's a checkbox that talks about a $10,000 advance, and it does say advance on there. But that $10,000 advance will be converted to a grant if for some reason, one, you don't qualify for an economic injury disaster loan, or two, you decide that you don't need the actual loan at that point, and you don't get a loan. So at the end of it, there's a checkbox for a $10,000 advance. Make sure you check that. And then what's also interesting, I've had a lot of clients talk to me about concern that they've had, is it does ask for banking information. So the goal of this was to be able to workflow through this process, be able to get $10,000 quickly, and have it go right into your bank accounts. So that still is the concept. I can tell you on a fact basis, I have not identified anyone that I've spoken to. I've only seen anyone I've spoken to or have consulted about this has yet to receive any money on it, and that's people who have applied more than 2 weeks ago. Again, I think a lot of the work is really tied up in the payroll protection program right now. I do feel they'll start to allocate some funds. I've read some press where some individuals or sole proprietors have gotten some money, but it's been very sparse, and it's been very sparse not only in terms of funding or granting money, but it seems to be sparse in terms of the press that's out there on it right now. So you may hear more. But once you're at the end of that application, you will get a confirmation number. And when you have that confirmation number, you will get an email, because you can put your email address in the application. And then you just need to watch for that email. So you will get contacted by the SBA. And what we're understanding, we've spoken directly to the SBA. And unfortunately, what they're not committing to is really a timeline for someone to get back. They are saying there may be additional documents that are going to be required, but the loan officer will let you know what that documentation is. Once the application is submitted to the SBA will email the applicant a link to a portal, and at that moment, the applicant will be able to track your application status through the portal. The loan officer will request, like I said, any additional documents if needed, and they will ask for the information through this portal, which will enable you to upload it in a secure manner. Like I said, there's no ideal application package right now, but I would expect to have at the ready, a business income tax return or your latest nonprofit return, any financial records that you have, particularly through for 2019, and any documents related to kind of monies going in and out. And I think the other thing we understand is they are checking credit reports. So just, if you're not sure about your credit right now, it might be good just to check Experian or one of the other services just to kind of see where you're at. And I mentioned all the other features of the economic injury disaster loan. And I think the last thing to talk about on this page is really the forgiveness management piece, which Jen was talking about a little while ago. And it's really, this is really key on the PPP, kind of going back to that, is making sure you're planning out not only for the next 8 weeks, but really planning out for the rest of the year. And I think that's really important before you apply for a loan, or in that period of time after you've done the economic injury disaster loan application, and the time when someone has contacted you, you should be creating a forecast of what your needs are going to be, what your cash needs are going to be through the end of the year. Okay, next slide. All right, Matt, you want to take us home on this?
Sure. Thanks, David. So basically, this is just a summary of what we think, if you're interested, what you should do now with the PPP to be prepared for if and when this opens back up again. So the first thing, calculate your loans. I talked about that earlier. The calculation is fairly simple on the PPP, just on the front end, and just make sure you're ready for that amount. Also, if you're looking to couple that with the EIDL, just make sure you're not using the same expenses for both, or kind of looking at it, are you looking for them simultaneously, or maybe thinking in the future taking an EIDL for expenses after that 8-week period for the PPP. Plan ahead for the forgiveness. I know Jen talked about there's a little bit of complexity involved and some decisions that you need to think about in terms of staffing. Make sure you're prepared for that. And then also plan that path for liquidity, because we know where we are now. Think about where your organization may be in the future. I think the kind of one thing I will add to this, kind of outside of the loans, make sure your organization is aware of the change in the charitable contribution limitation rules for non-itemizers. now can deduct up to $300. So make sure you get that message out to the extent that you can, sort of message some of your donors and some individuals who otherwise maybe wouldn't have been able to take advantage of it. Something to think about as well. Also, the change to the adjusted gross income amount for large donors. So cash donations go up from 60% to 100% in 2020. So I also, as a nonprofit organization, think of that. Think of your message to donors. What you're doing is important. Making sure that you get that message out to not only just use the loans available, but also take advantage of some of the changes in the legislation to help your organization as well. Next slide.
Yeah, so this is David again. I'll talk a little bit about these products. Before I get into it, I think, Matt hit on a couple of things, I think, and we talked about some other programs. I think it's also really important to remind you guys, the state of California, and if those of you who are outside the state of California on this call, some of you may be from Colorado or Texas or other places, check with your state governments and your local governments as well. There's a number of grant programs, particularly in California. I'm not going to go into the details of them because I honestly don't know them all. I know there's a lot of availability. I know there's availability. So check locally. And then what I'm also coaching people up on is industry organizations. So organizations like the entertainment industry or the restaurant industry, they're also offering some grants or services, some other things, either through their foundations that they may have, or they may actually be willing, vice versa, they may be willing to collaborate with some other nonprofits on providing aid or even supporting, being able to pull resources together. So I think there's a lot of other, beyond sort of the federal and national programs that we spent a lot of time talking about. Definitely do some of your own research and look out what's available locally, particularly in the state of California. There are a number of programs to look at. Okay, so here's kind of an outline of, of how we are helping our clients and also new clients as well. We've kind of got 3 phases that we can help with. We have a site that we'll be able to share at the end of this webinar with everybody. But sort of the basic is client counseling, right? So basically we can get on the phone with you, kind of review your loan calculation process, and we can either provide you some consulting and advisement on some of the other opportunities that are out there and help you navigate some of that. The other piece of this is kind of the second level is kind of the PPP or even the economic injury disaster loan application process. So we can help you get the loan application ready. We can kind of help you organize your payroll costs or any other data that you need to be able to prepare. We can make sure that we can help you with your bank to the extent you need it. Now, some of the bigger banks have gone to an online process, so it becomes pretty turnkey. Other banks are still doing it kind of with lending agents and relationship managers. So we're happy to help work right beside you in that process. And then really, I think that the third piece, I think, which is really becoming more prevalent right now, is really the forgiveness process. And we can help with the forgiveness calculations. We can help maintaining records for the forgiveness. We can help with gathering and analyzing any of the use of funds materials. And we'll be continuing to add to these offerings, particularly I think over the next few days or into the early next week. We'll also be providing support on Main Street lending and some of the other programs that are out there. So the bottom line is, if you need help, please reach out to us and we can figure out a way. We'll certainly collaborate with you on ways that we can help you. Let's go to the next slide. And lastly here at Armanino, and then we're going to get into some FAQs. I'm going to kick it over to you, Allie. But we've got our COVID-19 resource center. So there's a wealth of information. We have over 100 documents, blogs, articles, summaries of various programs that are available out there. We actually recently, I'm talking about the state and local opportunities. We recently published a grid that sort of covers every single state in the union and various opportunities, and we continue to build that out. So there's really a wealth of information on this site. So we encourage you to be able to access it. You can go right to our website. There's no registration, I don't believe, or anything required. You can go right to the website and kind of access some of the materials there if you want to do some of your own due diligence and research. So I'm going to turn it over to you, Allie, and maybe you can help us navigate some FAQs.
I will. And as a reminder to everyone, after today's webinar, we will be sending out the presentation and the slides and any links that we have presented today. So the first question is for David. Am I eligible if my business hasn't been interrupted?
So yes is the short answer. The longer answer is there is a check mark on the box. You have to be willing to attest that there's been some business interruption, right? And I think everyone's been affected in some way on this. So the actual check mark, if you're going to do it, is you have to be able to attest to it, just like you're attesting to it on the like your tax form. So I guess really the longer answer is, if you haven't been interrupted and everything is going swimmingly and your revenues are up and your donations are up, then no, you really haven't been interrupted. And I would say get out of line. Don't get in line for any of these opportunities. If you really have been interrupted, then you need to be able to commit to it, and you're going to need to be able to support it. So really the short answer is yes, you can apply, but no, you need to be able to be truthful about it and be able to demonstrate that you've been interrupted.
Okay, next question is for Jen. Does the 100,000 payroll cost per person limit mean I exclude the person's wages entirely, or do I exclude payroll expenses over 100,000 per person?
Jen might be on mute.
Thanks, you guys. You can include everyone's wages up to $100,000. And remember, if you're paying someone $90,000, you also include the 401k and the benefits on top of that to get yourself up higher. But limit the wage piece, just the wage piece, to $100,000 per person.
Okay, the next one is for you again, Jen. Do I include workers' comp in the payroll expense when I calculate my base pay?
No, you do not. Workers' comp is a company insurance policy, not an employee benefit.
And again for you, how do I count my 500 employees?
Okay, this is a little tricky, but I would try to keep it simple. If you have your base period is 2019 and you calculate your average compensation in 2019, you should use average head count for the same period so that you're showing apples to apples, that this is my average comp when I pay this many people.
All right, Matt, the next two are for you. I use a PEO. Can I apply and use my payroll expenses?
And the answer is yes. I think a lot of organizations use professional employer organizations to handle their payroll, file their W-2s. I think to the extent that you have an agreement with that PEO, the answer is yes. So just make sure you have the files. The other thing we're suggesting is adding in a letter from the PEO outlining that agreement, so that they know that these are your employees, and essentially the PEO is just filing the payroll for you. And then moving on to the next, do I need to file my 2019 taxes before getting the PPP? The answer is no. And maybe I'll just add in, for any fiscal year June 30 organizations that have their Form 990 due May 15th, the IRS has just come out and extended that filing requirement to July 15th, just so that you know.
Okay, David, what banks are doing this program?
Started talking. Pretty much all the big banks are doing this program. Any SBA authorized SBA lending institution. That was over 800 banks in 2019. I know based on the press, there's been over 1,200 banks. So there's other banks that have gotten into this game. So number one thing to do is check with your local bank and see if they're accepting applications for the PPP. Ask them if they're accepting applications for any other lending program. I think the other thing is if you're not qualifying for the PPP or it's difficult to get to economic injury disaster loan, ask your banks about line of credit or other lending opportunities. There's other financing opportunities. You might be eligible for something else if you've got good credit and have a pretty established business, but you're going to have to be prepared to perhaps provide some collateral or some personal guarantees.
Hey, David, it's Jen. I want to make sure that people really heard what you just said, because I think that's the first question everybody asks you. Do you want them to go to their bank, the bank that they have a relationship? And then you've said several times now, the EIDL, you go online to apply. You don't go to a bank, right? You go to online to the SBA. So do both. Absolutely do both. Ask your bank to help you. I know people are violating their curfews and walking into their banks, and that's sometimes what you have to do.
And wear your masks.
Jen, the next one's for you. Can I use the PPP loan proceeds to pay off debt?
The answer is no. Because the rate is so low, it is called a Paycheck Protection Program loan. And everybody's calling it the PPP, and they're forgetting that it's about paycheck protection. You must use it for that. You are not allowed to use this great loan to pay off other debt. And that's what the EIDL could be used for.
Okay, and then the next one is, can I take advantage of the federal payroll tax deferral plan if I am applying for the PPP?
And the answer is yes. And this is a point of great confusion all over the place. A lot of accountants are wrong, banks are wrong, and payroll processors are wrong. You can defer your taxes. If you have applied for a PPP, you can continue to do that deferral all the way up until the day they tell you that some of your loan is forgiven. At that point, you have to stop doing the deferral. At that point, you're not going to be asked to pay it all back either. Whatever the balance is at that point, you still can pay off 50-50 over the next 2 years. So again, don't delay on that. That saves you money right now.
All right, David, can I have both SBA loans, the EIDL, and also the PPP?
Yes, is the answer to this. And particularly if you've applied for the PPP already, as Jen just mentioned, you can go online to the SBA site and apply for the Economic Injury Disaster Loan. You can do both. The other thing I'll say is if you did have the Economic Injury Disaster Loan before you applied for the PPP, they will and should ask you to refinance the EIDL into the PPP. So just be ready for that if you're one of those probably few organizations in that situation.
All right, and then what are the requirements for the EIDL?
So I think I kind of covered some of this. Number one, go online, go through the application process, be able to share the information that they're asking for. If you kind of stop, start, and like, oh, I don't have this information, it's okay. You can stop the application and start over again. The website's very responsive. And then once you get ready, once a loan officer does contact you, I would say be ready with your credit report. They may have already looked at it, so be ready to address any questions that they have. Be ready with your latest business or 990 tax return. Be ready with your 2019 financials and any documents related to, and any sort of, I think the other two other things that I didn't mention. One is, which kind of relates to the first question, is for the EIDL, you are going to need to be able to demonstrate some kind of economic impact, and they're going to ask you potentially for some description of what that is, and that could be a loss of donations, a loss of grants, a projected loss of grants. You may have had some immediate impact, or you may be expecting impact, or you've already been notified that something you were expecting to come and wasn't coming. So be prepared with a summary around that. And then also have that forecast ready. Really, in any of these situations, really be understand what your liquidity needs are going to be through the end of 2020. It's going to be really, really important that you're looking ahead as you do it.
Okay, and then we've gotten in a few extra questions. One is that if the bank that you currently have a relationship with is not accepting applications, can you go to another bank?
So I'll take that, and this is David. Yes, is the absolute question. So what we're finding is if you go to another bank, and we can actually, depending on the size, but we can actually refer you to another bank. But what you'll find is the banks are going to ask you, if you go to another bank, they're going to ask you to move your business over to that bank. These loans are not very profitable for these banks. They're going to want your business, so you have to be, if you go to another bank, you have to be prepared to move your business over to the other bank, not just through the loan process, but in perpetuity for the rest as you're operating.
Okay, David, and there's wanting some clarification on the $10,000 for the EIDL. They've read that it says that you'll receive the funds within 3 days. Is that 3 days of a successful application, or 3 days of when you get contacted by an SBA loan officer?
So the 3 days was published early on, and no one that I have spoken to who has applied for that has gotten their money in 3 days. I think the expectation is at least honestly, at least 3 to 4 weeks, possibly longer, to get the money. The SBA has been, I think they've actually updated their information. It's not from the time the loan officer contacts you. The goal of getting those advances out was to be immediate. It just hasn't happened at this point. So be prepared to put your banking information on the website. You may get the advance before a loan officer contacts you. That would be my expectation, but the timeline is really uncertain at this point.
Okay, Jen, this next one is for you. In reference to the extra $600 per week of unemployment, does that apply to anyone on unemployment, or just those individuals who have had to file unemployment as a result of losing their job due to COVID-19?
As far as I know, it's specifically to augment COVID-related unemployment. So I got that question yesterday. When you file for unemployment, you have to say when you got unemployed and why you got unemployed. And so it's clear that people are getting it who are saying, I just got laid off because of COVID. So if you have an existing claim, I would argue that you need to show that now you're truly in trouble because you thought you were going to get a job and now you can't get a job. I would talk to an EDD person and say, hey, I was close on a job opportunity, but now it's gone. So you might need to tie it to COVID. It shouldn't be that difficult because anyone who was looking for a job before had opportunities and now you don't. So I haven't heard of anyone not getting the extra $600, and that's a conversation with an EDD person if you can get them to pay attention to you.
Okay, and then David, can you close it out with talking about, again, the news that came out this morning that the PPP has maxed out on their funding, and whether people should still apply for the PPP given that news that's come out?
Yeah, yes, absolutely. You should continue to apply. The Congress is working on authorizing another $250 billion of funds. The president has said that he would approve additional money. So I think it's just a matter of time before that gets authorized and gets access into the system. So if you're in the application process, don't stop, keep going. If you have if you've gotten word that your application has been accepted, but you don't have a loan number from the SBA, stay in, because you're probably, I would say 50% of the way there. Your next step is to get a loan number. And if you just haven't started the process, start it, get the form filled out. There's connect with a bank, get into the queue. If they're not accepting applications, I would recommend trying another bank, or wait until you see news that there's going to be funding and then go back to your bank, but have your documentation, have the form is available online. You can actually see what it takes to complete the form so you can be ready. However, your bank wants you to present the information. So I would just say go to your bank. If they're not accepting applications, you could try another bank. If they're not accepting applications, then I would just wait, just be patient, study the news, and then try again once you see that there's been some additional funding approved.
All right, well, thank you. Oh, great.
I was just going to say, I know it's frustrating if the banks are saying they're not accepting applications. I get it, but we're going to tell you to be as prepared as possible. Try another bank, and then be patient and look for the funding, and then go forward. Sorry, Allie.
I was just going to say thank you to everyone who attended today. If you have any additional questions that have not been addressed, please reach out to us at experts@armaninollp.com, or you can always ask Jacqueline to put you in contact with us directly. And Armanino is here to help you answer questions, help you with your loan process and your forecasting going forward. So thank you again, and I hope everyone has a wonderful day.
Thank you.
Thank you.
Thanks, everybody.